Greetings, friends. This is John Queen with the Queen team of Coldwell Banker Realty in Colorado. I'm a realtor as well as a chartered financial analyst and chartered alternative investment analyst. And today I'd like to give you my September 2021 market deep dive for single family homes in Colorado. And as always, if you enjoy the content or you find it useful, please smash that like button and subscribe to our channel so you can get the constant updates, whether it's my market analysis on different segments of the real estate market, or whether it's neighborhood updates, or just useful investing tips, or my personal insights on how to buy or sell your home. So starting with the September 2021 market deep dive for single family homes in Colorado, I'm going to go through 6 slides that I've created that I've pulled myself from the MLS listing data for the Denver plus 25-mile radius, strictly for single-family homes, and we're going to analyze what exactly has been going on in the month of August and what that can mean for us from a trend perspective as we look into the future months and what that means for you as a buyer or seller of a home. So the first slide analysis that I've created is I've analyzed the average number of days that homes are listed in the multi-listing service here in Colorado. And again, this is within the 25-mile radius of Denver area and strictly for single family homes. And what we've seen is if you look on the top left corner of the chart I've created, you definitely see a trend pattern evolve from the year 2015 to the current one. Prior to 2015, the average days in the MLS listing were much longer. You see in 2011, for instance, it took on average 97 days for a home to be listed in the MLS before it closed. And even in 2013, for example, it was 53 days, which is less than 97 days, but certainly nowhere near the market that we are right now. But if you look at 2015 to 2021, what you start to see is definite kind of a trend pattern arise. And that is from 2015 until 2020, you have very similar number of average days in the MLS. 2015, 34, 2020, 32. 2021 has been a bit of an anomaly as we work through different stop-starts with the coronavirus period and the fact that everyone was trying to essentially buy 2 years worth of homes almost in 1 year so far in 2021. So we've seen much shorter days in the MLS. And in fact, in 2021, you can see the average is slightly more than half of the typical. It's 18 days on average so far in 2021. And what I've done is I've broken the those annual trends into multi-year sub-trends right to the right of that. So you see that I've looked at, on average, from 2015 to 2019, homes are in the MLS before they close for 34 days. For the last 2 years, 2019 to 2021, 3 years, 31 days, very close, even with the shorter amount of days in this year. And from 2015 to 2021, which is the entire 7-year trend, you see it's 33 days. So those are all very similar. So in terms of what's happening in the market, we can look at the August data, which is the most recent data that's currently provided publicly through the MLS listing system. And I've pulled that. And what I've done is I've compared the month of August to the average of the 3 preceding months. And that's what you see in the yellow highlights there. So for instance, this year in 2021, the average MLS days is 18. The month of August was 13 days on average in the MLS, which is quite short. Unless, of course, you compare that to the average of the 3 prior months, May, June, and July, in which case August is actually 14.71%, almost 15% longer than the 3-month average, which means we've seen a bit of a softening in the market in August, which indeed we have. How does that signal in terms of what's been happening this month versus what usually should happen in this month? Well, I've broken it out. Right to the right of that, you see I have my 2015 to 2019 sub-trend analysis, where it shows that in fact August is generally a slower month. So if you look from 2015 to 2019, on average, the month of August is 12.5% more days in the MLS, or longer to close, than the 3 months averaged out prior. If you look at the last 2 years, it's a little bit shorter because all the timelines are shorter in 2021 particularly, but it's still more than 10%, it's 10.29% longer in the MLS than the average 3 months prior to August. And in fact, if you look at the entire 7-year trend, 2015 to 2021, you see that it's almost 9.5% slower month in general. So the fact that things have started to soften up in the month of August is to be expected. It's not only signaling any special type of development or trend shift in the market, it's also something that the month of August typically exhibits as we look over, the entire history. And in fact, I've broken it. If you look at the subcharts below and you compare, I've done a kind of the number of days versus the month of the year, showing the amount of time that homes are usually listed in the MLS system before they close. You'll see that they all exhibit similar trends on from the 2015 to 2021, the 2015 to 2019, and the 2019 to 2021 period. And when you put them all next to each other, they don't quite overlap each other, but they're extremely close. You can see that data is extremely representative for all those three trends, and therefore all we can say at this point is that the month of August has been a slower month than the 3 prior months. On average, homes are in the MLS for 13 days, or were in the MLS for 13 days in August, and that's about 15% higher than the 3 prior months, and that's about what you would expect given historic data. The next piece of data that I've analyzed that we can look at together is the number of active listings per month over the year and different kind of trend periods. And that will give us an idea of supply. Because as any economist will tell you, market price is a factor of two main things: supply and demand. The number of days in the MLS gives you a sort of a glimpse on the demand, because that shows you how fast homes are moving and closing from when they're listed in the MLS. And the supply is generally shown by the number of active listings that are hitting the market every month. So the question is there something happening that's different or unusual with supply that can also give us a signal of what may be going on in the market and what to expect for the future? So what I've done is I have pulled, again, the average number of active listings per year, and I've broken that into the actual amount of monthly active listings per month, per year. And what we see is that, for instance, if we look at 2021, we have on average 6,316 new listings hitting the market per month. That is down significantly from 2020, which had 11,831 on average per month, 2019, which had 15,378 on average per month, which was a high year to be fair, or even looking at 2018, 2017, and 2016, as you see, those are ranging between almost 12,000 and more than 7,500. So 2016, 7,649. Still significantly higher than this year, 2021's average, which is 6,316 so far. And in fact, if we break it out within the year and look at how August was versus prior months, you see that August actually has a lower number of listings hitting the market than the average 3 months prior. It has more than 24% less new listings hit the market in the month of August than the 3 months prior averaged. Now, that is kind of to be expected, given the fact that August is a slower month and people may just decide that they don't want to take their home out to market in August. But still, let's compare it to prior periods, which I've broken out to the right-hand side there, if we look at the 2015 to 2019 period, which we can call our pre-COVID market trend, you see that in August, actually, the number of listings were up compared to the 3 prior months. So almost 13% up, 12.54% higher. So it's not usual from 2015 to 2019 that we have such a lower amount of new listings hitting the market, such as we see here in 2021. But if we look at 2019 to 2021, which is the most recent 3-year periods and includes the COVID 2020 and 2021 period, we can see that, you know what, it's not really that unusual that it's negative, because we see that in fact over 2019 to 2021, the month of August is more than 8% less new listings hitting the market compared to the prior 3 months average. And in fact, if we look at the entire range from 2015 to 2021, 7-year kind of trend that we're in right now, you see August, while it is up, it is not hugely up. So it's up 4.61%. Still, that minus 24.17% for 2021 is the lowest we've seen. It is highly unusual. If we go back down quickly again and look at the 2020 and 2021, for instance, average. So on the left side, if you look under the 2020 and 2021 years at the bottom in the gray, you'll see that the change is actually trending down in listings recently. So up until 2019, we were in 2019 we had 15,378 average listings per month. 2020, just due to COVID, that was knocked down to 11,831. 2021, it has been knocked down even further to 6,316. So we've definitely seen a drop in the supply this year in single-family homes compared to usual years, and especially compared to where things were in 2018 and 2019. If we look down at the charts below that, and we look at the average monthly listings, if you look at each separately from 2015 to 2021, which is kind of the macro trend we're in, and then it broken out into pre-COVID and post-COVID periods, 2015 to 2019, and then 2019 to 2021, you'll see that despite the kink in 2019 to 2021, they are all still very similar, and the trend lines do follow each other. So it's not the case that we see any serious divergence in terms of trend direction. It's just the case that there are less new listings this month and this year, and that is no doubt contributing to the price increases that we've seen in some form or fashion. But in general, everything's trending in the similar direction. So it's not like something's going super down when it's usually going super up. If we look at the next chart, I've looked at new listings by month. So this is the number of new homes that have never been listed before that are in the actual MLS, as opposed to last chart, which was the average number of listings in general, even holdovers from the previous month. You'll see the number of new listings hitting the market has been decreasing steadily in 2020 and 2021. We've got, so in 2020, the average new listings hitting the market was 6,950. 2021, it's a bit up at 7,047. Still below where we were at 2019, which was 7,314. And again, you see that the month of August is a slower month compared to the prior 3 months. So in 2021, this August, the number of new listings hitting the market is 13.76% below the 3-month average. And that is exactly the same case as 2015 to 2019. You see it's 8.02%, a little more than 8% below the 3-month average. 2019 to 2021, it's almost 13% below in the month of August compared to the 3 prior months. And 2015 to 21, the average of the whole macro trend is almost 9.5% below the 3-month average. And so what it's telling us is that there are fewer new homes hitting the market, not only on average for the year, which we've seen in 2020 and 2021, where the change is almost 5% down from 2019 to 2020, and then has increased slightly, 1.4% up from 2020 to 2021. But the month of August in general is a time where fewer people bring homes to market, no doubt because of those longer days in the MLS. People understand people are traveling, and it's not as active a month. If you look at if you compare the 2015 to 2021, the 2015 to 2019, and the 2019 to 2021 trends, all in that chart at the bottom left, you'll see that they are in fact all similar, and it's nothing out of the ordinary. If we look at the next piece of information, I compare the closing price for the home to the list price. And again, that's a percentage ratio. So that tells us if a home is listed for X dollars, what does it actually close for? Does it close for above that amount or below that amount? This gets into bidding wars, whether homes are overpriced, etc. If we look at the period of, again, 2020 and 2021, the COVID period, we'll see that, on average, you were around in 2020, almost 100% of list price on average to close. And in 2021, which has been, the post kind of COVID year, that has actually increased to over 100%, so 102.35%. And in fact, that's the first time that's happened in the last 10 years. Usually things are hovering around 98, 99%, but to be over 100, that's a little bit different. And so if you look at the month of August compared to the 3 months prior on average, you'll see that while the month of August is 101.5% on average sales price compared to the listing price, it's actually down, and that earlier in the year it was even higher. So if we look at May and June, it was over 104%, and July was 103%. And so the fact that it's 101.5% now, it's showing potentially that the market is slowing down and prices are kind of softening up a little bit, but it's still above 100%. So it shows that it's still a seller's market, and it's unclear whether it's the month of August it's a little slower or whether there's something larger going on. We need more data, which will follow in future reports. If we look at if we break it out into trends, so 2015 to 2019, the pre-COVID period, on average, you're still almost at 100% sales to list price, and August is generally the same as prior months if you look at the data. If you look at the post-COVID period, 2019 to 2021, you see that the month of August is slightly down, like not quite 0.75% below the 3 months prior on average, but it's still above 100% closing price to list. And if you look at the entire trend from 2015 to 2021, you'll see that, again, it is, August generally is a bit of a softer month for pricing as well as just general new home activities and listings. It's still over 100% on average. So pricing is still quite healthy in terms of what you're seeing in the list price versus what they're actually closing for. And if you break out the charts, you can see that they all, again, are fairly similar. The 2015 to 2019 is almost flat because it's hovering around 100% the whole time. But the 2015 to 2021 and then the 2019 to 2021, you generally see that home prices will start off a little bit below 100% in January, and then they'll do an uptick, and then around September they will then dip slightly below 100% and kind of stay there until the end of December. And again, when you, at the bottom left hand where I have my chart where I compare all three, the macro trend 2015 to 2021, and then the pre-COVID trend 2015 to 2019, and what I'll call the COVID, post-COVID trend 2019 to 2021, you see that they do actually track each other, and it doesn't look like anything is seriously diverging from what you'd expect from taking a large amount of data. The second to last slide I'll show you is the closing price per finished square foot. And to me, this gives better optics on pricing because what you really care about is the finished square feet in your house, in my opinion. If you have a huge unfinished space, again, you can manipulate pricing with that in terms of the pricing per square foot in total. So I like to go with finished square foot because at least you can get more of an apples to apples comparison. And so what we see is for single family homes within 25 miles of Denver, in the Denver area, you see that right now home prices are pretty high for single family. They average around $362 per finished square foot. Now again, not all finishings are created equal. This is an average. So, what's finished to a high degree of, of standard with a custom builder might have a different square foot value on a home per home basis as something that's, just been done by hand 20 years ago. But having said that, what we see is, especially in 2020 and 2021, if we look at the average on the left-hand side of the chart in the gray bars underneath the 2020 and 2021 years, the prices have been increasing significantly over the last 2 years. And part of that could be a COVID effect. And when we look at if we move to the right and we look at the 2015 to 2019 pre-COVID trend, the average price per finished square foot in the broader Denver and 25 miles around Denver region is $259 per finished square foot. But then in this post-COVID period, it's skyrocketed up to $313. That's a significant increase, which then brings the average from 2015 to 2021 up to $277. So what we've seen is definitely a huge increase in the price per finished square foot in our area. That is something that's relatively new. And if you look at the month of August versus the 3 prior months, you actually see that it's come down slightly. So that could also be that prices are starting to soften up slightly. But because August is a slow month in general, as we've seen in previous slides, it's unclear whether that's an August effect or if that's beginning of something new. Again, we'll analyze more data. If we look at 2015 to 2019, you'll see that in fact, August generally has a more than 1% lower price per finished square foot than the 3 prior months. The 3 prior months are hotter from a pricing point of view. 2019 to 2021, even though the prices are high, it's still 1% below. So it's still, compared to where we are, relatively softer. 2015 to 2021, the entire 7-year macro trend, it's almost 1% below. Not quite 1%, 0.81% below the 3-month average. So it's definitely a slower month and a softer month for prices. If you look at the charts, you'll see, just again, one thing that's unusual about this is just the amount of increase in the price per square foot over the last 3 years, 2019 to 2021. If you look at the bottom left-hand side where you do that, you see that it's just the gray line is way above the blue and the orange lines, which is the blue line being the entire macro trend and the orange line being the pre-COVID period. So definitely the price per square foot in our area has increased significantly. And then finally, what we'll look at is the average closing price data with a focus on current trends. So again, average closing prices are a little bit misleading because it doesn't get into the square footage of the house, the location of the house, the finishing of the house, how many cars in the garage, how many bedrooms, bathrooms. It's just the average price. So it gives you some information, but I find it gives you maybe less useful information than the closing price per finished square foot. But if we look at it, you can see in line with the higher price per finished square foot, home prices have been going up significantly, as everybody who's watching this video already understands, I'm sure, in our area in recent years. And so what you're seeing is on average in 2020, home prices went up almost 8.3%. So they went up 8.29% from 2019 to 2020. That's relatively in line with if you look out to say 2012, 2013, 2014, even 2016, 2017, 8.29% is within the realm of the usual. What's not within the realm of the usual as much is if you look at 2021, you see that it's gone up over 18% compared to 2020, which itself was almost 8.3% above 2019. So again, the average home prices in our area has gone up significantly. Again, difficult to read into that data unless you understand what it's making up the character of those homes, how big they are, etc. But what we can say is, on average, homes cost more in our area than they did before. But August is a softer month, as we've seen in all the prior slides. So even though homes are up so much, the August prices are, for 2020, are all 2.41%, not quite 2.5% down compared to the 3-month average home price in our area. And if we break that, and that's fairly in line with trend. If we look at 2015 to 2019, August home prices are a little over 2% below the 3-month average for May, June, and July. 2019 to 2021, it's a COVID period, so there's been this bit of a hiccup. They're actually up 0.96% just because we've had this kind of slow burn of price increases in this year particularly. But 2015 to 2021, even without those increases in price over the last 2 years, you see that August is a slower month still. It's a cheaper month still on average, where it's not quite 0.7% cheaper, but it's close, 0.69%. And if you trend all three charts there at the bottom, you'll see that, again, the gray line in the bottom left chart is the 2019 to 2021, kind of most recent 3-year period. It definitely is at a higher price point, and that's due in large part to that 18% price increase that we've seen and the 8% price increase that we saw the prior year before this one. But on average, the shape of the line is fitting. They all kind of parallel each other. They all, as you'll notice, all of the average prices, they generally start off at a low point in January, hit upward trajectory until they get around August, and then they seem to drop in September, and then kind of rebound slightly in October, and then kind of stay flat till December. So we'll see if that happens this year. We still have a few months left in this year to understand that. We'll definitely look at the market again each month and analyze it. But again, from the data we've seen here so far, the one thing that we can say is that, number one, August is a slower month. Number two, the closing price per finished square foot has really jumped up in the recent last year particularly, but the last 2 years if we're looking at it. And as a result, the average closing price per home appears also to have gone up quite a bit. But whether that's a trend, whether that's set for a reversal, we'll soon find out. So thank you very much once again for your deep dive. I do things a little differently here because I try to use my skills as a chartered financial analyst and chartered alternative investment analyst to bring to bear to create some extra deep dive for you. So I hope that you found it useful and not too tedious. We'll be doing this every month, so at least you'll get different optics on the data, maybe different from what's mass fed to you through different outlets and resources. And if you have any questions, feel free to contact me and Violetta either at our website, queenestates.com, or at the Queen team at coloradohomes.com, or through this YouTube page. Take care and have a great day.